Money FM 89.3. Best of breakfast. Morning Shot.
Welcome to Morning Shot. I'm Audrey Siek. Now, Singapore's manufacturing sector has found itself in a unique and uncertain spot after the Trump administration rolled out a fresh wave of tariffs, slapping a baseline 10% duty on Singapore's imports. We were seeing some glimmers of opportunity. Some manufacturers here are seeing a surge in interest from American clients looking to shift away from China and Vietnam, but there's also a growing concern about how long this advantage will last. Is this shift temporary or part of something bigger? To help us understand what this means for our manufacturing sector and what ripple effects may follow, we have Lennon joining us, president of the Singapore Manufacturing Federation. Good morning, Lennon. Great to have you on the show.
Good morning, Audrey.
Thanks so much for joining us. An ever-changing story, as you know. We're so glad you're breaking this down for us. So let's start with a bit of an overview here. How significant would you say are these new tariffs for Singapore's manufacturing sector overall? Are we possibly looking at a temporary boost?
Hi, Audrey. I think many people ask me this question, and Singapore is really right at the base case, 10%, right, which is the lowest that you can have under the latest tariff situation. But I want to remind others that actually most of the Singapore manufacturers does have a Singapore plus one or Singapore plus China plus one kind of strategies. So the impact really is not just looking at what we produce here, but what we produce as a whole in the region. Therefore, the impact can be quite significant. Now, obviously, the US now attracts a base 10% duties with electronics and precision parts from China facing far higher rates. Now, Singapore roughly exported $70 billion to the US last year, roughly about 10% of our non-oil export. Now, some firms may win orders in the near term because we have a 90 days break and, people are building up inventory in preparation of the unknown. But certainly this kind of prolonged uncertainty destroy any mid to long-term plans like CAPEX as well as investment into productivity and so on. So I would say that certainly some sectors and some companies would experience a boost, but we will say this is temporary.
Okay. So we've heard of companies like Watson EP and GD Precision seeing a sudden uptick in interest, right, from American clients who want to move operations out of China. So could this be a kind of like a turning point for Singapore as the preferred hub in global supply chains in general?
I'll put it this way. I think the competition between US and China is not just now. It happened since Trump 1.0. So you would see companies like Guardian already putting up strategies in this way. However, the tariffs currently really accelerate that intent or that move. So I think this is what we are seeing.
Okay, so President Trump now appears to be easing up slightly on China again, right? Suggesting that the U.S. could possibly resume talks. So all this back and forth, does it make it harder for Singapore firms to plan ahead with confidence? How does this uncertainty kind of impact the decision-making process?
Absolutely. I think on Sunday, the U.S. Treasury Secretary said that there's a path to a deal. Yet Beijing immediately laid down. So this kind of seesaw makes any mid to long-term planning almost impossible. So firms are right now run different scenarios. What if tariffs remain at a certain rate? What if it's, 25%? What if 50%? And that's how I think the best what the company right now can do is really wait and do scenario planning.
All right. We also wanted to clarify here, Lennon, given Singapore's FTA with the U.S., do these tariffs technically violate the agreement, or are they kind of looking for a loophole that sidesteps traditional trade rules?
In my opinion, I think they probably skirt rather than break. The letter of the FTA, because, Washington involved the national security powers under IEEPA, so legally it's defensible. But it violates the spirit of a 20-year-old pact grounded in open, rule-based trade. So therefore, I'm sure our government is engaging the U.S. Trade Office to seek clarification and perhaps carve out certain sectors. And we've heard DP and Gan just having a telephone call with the Trade Secretary, seeking clarification, seeking negotiation, and I think it's a good start.
A good start indeed. And for companies already exporting to the U.S., do you think most will absorb the tariffs themselves, or will those costs eventually get passed on to the customers?
I think it depends, Audrey. High-margin life sciences exporters often absorb part of the tariff to protect their market share. However, there are more price-sensitive contract electronics makers, for example, operating at the single-digit margins. They may not have a choice but to, reprice or just, they have to play to the customer. So over time, the consumer will benefit. And obviously, we heard the U.S. Retail Federation already warned of price hikes and empty shelves.
Yep, something to look out for sure. And I want to look beyond direct manufacturers now, Lennon. What about adjacent industries like logistics, industrial services, R&D? Are we starting to see ripple effects in those sectors as well?
The quick answer is yes. You will see that in the I use the word in the old world whereby we look at logistics supply chains, looking out for efficiency. Now, really the strategy is on resiliency. So not necessarily, you do by the best cost, but really how you can ensure long-term, business surety. So logistic volume over the Trans-Pacific lakes are down and mid-single digits since April, right? So banks are also feeling heavy demand for FX and tariff hedge products. So I think there are some new services that are coming up to support this. And obviously, R&D may not be an actual sector, but R&D ecosystem is seeing a slowdown in terms of investment as also prototype orders. Conversely, fintech and treasury centers in Singapore have a chance to shine as, firms seek more sophisticated risk management hubs like Singapore.
So you talked about resilience there. And do you think Singapore's in a pretty good place? Because, we have some long-standing strengths like our regulatory transparency, a skilled workforce, strong IP protections. These are being cited as reasons why global players might stick around. So can these factors help shield us somewhat from the current volatility?
I think they do more than shield. They differentiate us, our political stability, the common law IP protections, as well as digital trade pacts such as the DEPA, means that the global manufacturers continue to anchor high-value products here. And that's why even with tariffs, FDIs into advanced manufacturing hit a record of 17 billion last year for us. So I think Singapore is a good position in this uncertain and ever-changing scenarios. We are a safe harbor.
Yeah, well, this is a pivotal and unpredictable moment for Singapore's manufacturing sector with global trade winds shifting and tariff waves still unfolding. We will be watching closely to see how this unfolds. That was Lennon Tan, president of the Singapore Manufacturing Federation. Thanks so much for your time and insights, Lennon. Really appreciate it.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.